All right, folks, welcome to the Trading Nut YouTube channel. Now, today we've got a bit of a special treat for you. We've got Aaron Oetting on the show with his trading mentor, Jerremy Newsome. And guys, if you don't know the story so far, go back and check out some of the older episodes, some of the older interviews that I've done on the show, on the podcast, and also on the YouTube channel. You're going to find Aaron's first trading mentoring session with Jerremy, and by heck, there's a lot of information in there, a lot of goodness. You guys actually get to see the whole session. And what's more, today you get to see his whole second session as well. So you get to see Aaron being taught by Jerremy again and how he's progressed over the last few months. So we've had now 4 updates from this guy. We're tracking him across the course of 2019 to see if he can become a successful stock trader, full-time stock trader. And you're going to see some interesting stuff in this episode or in this show, in this session. You're going to see how Aaron is progressing and why he's progressing and where to next. So guys, I'm going to leave it with Jerremy and Aaron. So enjoy the show. It goes on for about an hour, so I know you're going to love it. Great content in here. So here we go.
Love to know. Just go over and talk about either what you struggled with, what you traded, what your questions are, review some stuff, make some tweaks if necessary, and just see where you're at and see how you feel.
Sounds good. Sounds good. Let me get my stuff open. So I think originally I was looking at bunch. We'll jump cut to the end is what I was thinking about.
That's fine.
So, I'm right now. I'm just focusing on 2 types of trades. I'm doing after watching all your videos on the gap trading. I'm doing day trades on retest bear and retest bull gaps. I've had pretty good results on that. It took me. The big thing there is I focused on just making sure that I think I was getting to when I first started doing. I was getting a little greedy with my price targets.
Okay.
And once I cut those back to more reasonable rates, I've been well over 50% win rate. So,
which is great.
Yeah.
Yeah, that's very key. And I will say too that realistically, you're referring to day trading or swing trading or both.
For that particular strategy was just day trading.
Right. And the interesting thing too is, not only with retest gaps, but just kind of trading in general, a lot of people vastly overemphasize, how much gains to make. And it's not greed. Usually it's just simply optimism, just really being excited about how much it could get or where it could go to. A lot of people expect it to get, like the 2 to 3 times your risk. And it's just very rare that actually happens. I've done a lot of my day trades where I go, wow, man, if I had exited, at 1.3% or 1.3 Rs and would have just closed the entire trade down, I would have won on that trade rather than end up. Maybe you normally still win, you just win smaller.
Yes, and that's been the key. Once I started about 1.5 has kind of been what I've been targeting on risk. Uh-huh. And once I started doing that, and if it starts getting shaky at about 1, then I'm willing to. I'm like, all right, I'm just going to cash out. And
bingo. And the cool part is too with the retest gaps, and I'll share my screen for just a second. Yeah. And we'll pull it up in a second. But let's just go look at Square as an example. Yeah. So Square, this is one that had a retest gap on Friday, and it really was a good gap. It was a inside day candle, a little bit of indecision candle. You had a gap and go on Wednesday. You're kind of gapping below support. It was a small gap. It was a nice retest gap. And I don't know if this is the one you played or not. I don't think it was, but
no.
On a 3-minute chart. So this is realistically the retest. It came down, it retested, and that was it. So in a situation like this, if you'd gotten in around here somewhere with a stop right here, you would not have hit 2 Rs. It would have been like 1.5 wins, some change. And not only that, but this was a great, 1, 2, 3, 4, 5 wave structure. So once you kind of start coupling all that together, when you're playing a retest gap, we have to remember that they're most likely at some point going to retest, right? Yep. You're going to have a really big move. And the cool part about that is when you really start nailing it down, Aaron, you'll be able to play the initial move, and then you'll also be able to play this move and be able to catch kind of both of them.
Well, what I'm doing also, the other thing is I had to do is I found myself, because of the PDT stuff, I found myself I was trying to do it every day, and I found myself oftentimes like, oh, I've only got 2 trades today, and I've got 3 things I'm looking at, or I've got 1 trade, I've got 3, and I was like, all right. So once I cut it to said, you know what, I'm only going to trade. I'm going to day trade once a week when I've got my 3 trades and I can do it right. And once I started doing that, that way I wasn't trying to cherry pick which one of these 3 or 4 to do. So that helped a lot.
I like that.
I'm switching over to another broker to get. I'm going to do a cash account, so that way I can probably do a little more often. So,
yep, totally agree. And like I said, that's a big thing, man. The brokers. Some people don't visualize and understand how key that can be.
Yeah,
making that change, making that improvement.
So,
what broker are you with now?
I was using Robinhood. I'm going to switch over to Webull because they let you do the conditional, the OCO orders.
Yeah. Yep.
That way you can remember, because one of your videos, like, you really, especially on swing trading, you need to set it and then just walk away.
Yeah, totally agree. Totally.
And I was like, all right, I need to, and so you didn't have that option in Robinhood, and now I'll have that option. So
gorgeous.
So
wonderful. Okay, so yeah, what day trades do you want to walk me through?
So
I'll stop my screen share. I'll make you a co-host just in case. I don't know if that'll change anything, but you'll be able to share your screen or whatever you need to show me.
Yeah. Let me see the last ones we did this week. So, all right. Let's just do. Yeah, this is fine. So we were looking at this guy here. FRO. We traded it. Let me check my. I traded it on 29th.
All right, 29th. Yep, nice gap. So let's just talk about what I like about the gap while we're here is front line. So I love the fact that a gap below this lower shadow. And you already kind of had the bear trend somewhat in place. I mean, you had a few bearish candles in a row. And so, we knew short term, most likely, the trend was bearish. So it was kind of relatively simple to get an idea of, okay, gapping below, really the main key is gapping below that lower shadow.
Yeah.
Because you had some people who were trying to buy this dip. So bull move, trade lower, and they were hoping that would happen. And when it didn't happen, right, and that lower shadow came in, that's where all their stops are. So a lot of people, when they expect a move like that, what I love about the whole S-curve pattern, Aaron, is when you draw it and you can see it and you go, yeah, this is what should happen. When it doesn't, it offers really great trading opportunities.
Yeah.
People are going to have their stops and everything down there.
Yeah,
what time frame are you trading that on? 3 minute, 5 minute?
So 5 minute.
Okay.
So we'll switch it up to the 5 minute. And then we'll go back to the 29th. So that's probably it right there. Right, and the other is those switch brokers, and right now I can't short. And then when I switch brokers until at some point I'll be able to switch it. But I've just been playing these retest long, and if you look right here, I grabbed this little move right here from 10 o'clock until about there, and I grabbed it at 7.99, sold it at 8.06.
Sure,
it's about 1%. So it was just a tiny, nothing. It was just when everybody started getting stopped out.
Yep,
everybody started selling, and you just got that little pop, and so.
Bro, your analysis has already gone up. Like, so you have been putting in the work, haven't you?
Like I said, we've been thinking I wasn't trading a lot when I was on the boat, but I spent a lot of time just thinking about it and breaking it down. We didn't have TV, so every night we'd hop on the internet and we'd just sit and stare at the charts and look at them and
love it.
We could. So not even trying to trade, just trying to
analyze it. That's the key, man. That's the thing is, a lot of people make fun of, traders who go back in the past and review. It's like, oh, that's hindsight. It's like, well, yeah, but that's how you learn. You know, when you go back and you look at the chart and you ask the question, why? Like, what are people feeling? So this is a great example, because what I love on retest gaps, especially on the SPY. Now, I know we're not going to talk about that right now, but I could have it almost an entirely trading, like a whole plan just for the SPY. But on retest gaps, I love when you get 2 or even better 3 just pure traps where people are, you know, stopped out and losing money. And for example, here's really the S curve, right? So that's the rollover. And then all the newbies are getting embarrassed right here on the breakdown, which I'm not necessarily saying is a bad trade, but remember, you had 4 or 5 bearish candles in a row on the daily chart. So you're going to have a lot of people at some point in time buying to cover. So good traders, when they're embarrassed, they buy to cover when the stock goes lower, right? Buy into weakness. So then the stock trades up. So this is how you played it. So you played the long. And right here, do you think people went long on the breakout?
Somebody did. I used to.
Yeah, exactly. Yeah. And so we want to be selling to them. That's the thing, is when we're buying, we do want to buy preferably as low as possible after a new low has come in, and then that new low kind of gets taken out. And I'll talk about that in just a second. Yeah. When we want to get in there, we want to buy as low as possible, because a lot of beginning traders will wait for, you know, confirmation. Okay, now I'm getting in. It's like, well, at that point, dude, it's already done a 1, 2, 3, 4, 5, and I'm going to sell to you, and then it's going to trade lower, and you're going to get stopped out, and then I'm going to buy again, because that's the curve. So it's really fun how that works. But yes, this is a great spot to sell if you're in a long, and it's a good spot to be looking to get in short, because you got the third trap.
I ended up just on this one, I sold it a little short because I was playing off that second bounce, so about 8.
Oh, that's fine. You're never going to sell the top.
No, of course. I was just trying to play it, and then when I was trying to play it safe. I'm trying to,
No, I'm totally fine with that. And like I said, the whole, you know, PDT restriction rules, I get that there's always those challenges, but you know, in the meantime, while you're practicing and learning, there's also other ways that, you know, we can leverage money that you can use $3,000 and turn it into a day trading account. But beyond that, I love your exit. Again, we're never going to sell the exact high. The good news is, had I not gotten in bearish yet, which I don't think I would have, when that evening star comes in, I will short below there with a stop up here.
Yeah.
Because I can see, all right, that's trap 1. This is trap 2. Doesn't mean it's going to work, but that is the retest. Like, that's a nice, that's actually the retest. Like, if we turn the 10 EMA on, it's probably right there. And you know, that was the bear move. So earlier when I mentioned about getting in as low as possible after a new low has been made, and then that low gets taken out. So this candle, all right, this is a new low.
Yep.
And you got you know, a support level right here, and then it makes this new low. So a lot of people go, all right, well, where's the distinction between how do you know a new low is being made and then it's going to bounce? Normally what I look for is a big bearish volume candle.
Okay.
So I say, all right, what's the most of the new low that just came in? Where's the most bearish of those candles? And then if that candle gets taken out, that's when I'm going long. So exactly, you're hovering over right now. So that's the most bearish candle. So until that candle gets taken out, I'm not going to look for a long. Now, the interesting thing is I'll plan on it because it made a new low. But I won't do it until this candle comes in right here. So see that little bearish candle?
Okay, because you don't want to play after a bunch of greens in a row.
Exactly. So what's happening on this one is it's trading down, and people are trying to roll it over again. Yeah. So I don't want to go bullish after a bunch of green candles because the move has already been made. So once that bearish candle comes in, now it's like a little bit of a resistance right at that line. And when it breaks above that bearish candle, then I'll get in long with a stop at the low, you know, below the low of the day.
Okay, so this guy here at the 1205, that's probably where you're getting in on.
Yep, correct. And again, it's if I'm trying to fade a gap, that's what this is trading the opposite direction of the gap. It's not a perfect science. Obviously, it's not going to work every time. Nothing does. However, if I'm going to fade it, that's what I'm looking for. Is I just simply go after stock makes a new low, I wait for the most bearish candle to get taken out. So in this example right here, it would have been that candle.
Yeah.
That's the most bearish candle. of that little move. So when it's doing this, I'm thinking, okay, well, if it breaks above the high of that candle, I'll get in long. But until then, I won't. And then when it makes a new low, I go, all right, well, let me find the most bearish candle there, which is that one. And again, if I'm going to go long, I got to wait for that candle to get taken out before I'm going to go bullish.
That makes sense.
Yeah.
Okay. So then, and essentially, then that gives you multiple opportunities to trade these retests or multiple potential entry points. So, yeah.
Yep. Exactly. Which is really great. Great trade though. And then did you trade this one a second time, or was this drawing right here the previous setup?
This was the previous setup. I traded it. This move here is where it's set up. This was just I had set it up.
Yep.
To where when it did this drop here, I was looking for it to come down again to a little about 799, and then come back up from there. And then I caught it. I'm not sure which one of these two I caught it in, on the down or the up, but I identified about 799 is where I wanted to catch it, and then I wanted to ride it just up to that 806.
I love it. Fantastic. All right, what's the next one?
So the other one went for day trading. We did CPIR. And this is same dates. This is on the same date.
Okay.
And you can see right there as the red and green was the setup.
Yep.
That move right there is what I caught. So I think it was what did I sell it at? CPI 35.38.
Yep. So just locked in an R on it.
Yep.
Yeah, that makes sense. And again, we're talking about the whole, for fades. If I'm ever going against the trend,
yeah,
there will be plenty of trades that you're going to miss like really big rallies on.
Yeah.
But I'm very most likely going to take my profits early on a fade rather than if it's in the direction of the trend.
I'll show you one. There's literally a single trade where I realized we were trying to day trade Square back in early May.
Yep.
We were stuck in a harbor somewhere, and we were like, all right, he was like, show it to me in real time. And so we did it in real time, and we just did it too aggressively. And then if we'd just taken our profits, I think at 1.5%, it'd have been golden. But
let's go look at it really quick.
Yeah. So we May 2nd.
Okay.
On Square. Square. Let's jump to a bigger time frame.
Well, the faster thing is do like a 5-minute chart, then click this go to button down here. Yep, and then just type in the day.
It's like you know what you're doing on this chart or something.
Yeah, bro.
There it is.
Here we go. All right.
There's that. So you had the gap.
Beautiful gap.
Came down here. I think we got it. Let me get all the right numbers. So we got it at 67.50. Yeah, so we got in at when this green came in, hopped in there, and we got greedy and we're targeting something up here. And that was right, and that right there would have probably been, I think it's like 1.5% or something. So.
Yeah. Well, again, not greedy, just overzealous.
Yeah. That works too.
Yeah. Well, because and what's cool about this one is I love this trade because I remember this one very well. This was on my birthday.
Oh,
I love playing Square. So this was a birthday gift because I love this gap. We'll look at it on the daily chart next, but this was like a perfect gap. And when it took out the low of this candle, that was pretty much arguably the most bullish volume of the day.
Yeah.
And then it takes out that volume beautifully and, retests at once, makes a new low. The most bearish candle of that new low, which would be that candle, gets taken out. And that's, again, I agree with you getting in bullish. I did have a lot of people play that location bullish, and some people sold here and some people didn't. And it's simply like if you sold there, you would have made maybe 1, maybe 1.2, maybe 0.7, but it wouldn't have been a lot. But it would have been a win. And then right there, that was pretty much almost a tweezer top.
Yep.
right at the low, the low of the day. And once you see this pattern, you're not specifically bullish anymore. Once you see that tweezer top,
I remember staring at it going, I should sell now.
Like, at least move your stop or sell a partial or something.
Well, all of those things would have been better options than what we did.
Yeah. So I get it, and that's going to happen all the time. That's the good news.
Yeah.
It'll happen pretty much forever. The big challenge with that is just having the plan for the fades. So, like, anytime you're going counter trend, you just have to know that you're going to leave some money on the table. You're never going to get out the top. That's fine. However, it's going to be more likely if you are going to exit early, it probably should be on a fade because the direction of the trend is not, in your favor.
Yeah.
Now, the cool part is, let me see if I can pull this up really quick while you're looking at that.
So then,
go ahead.
So then a second entry, would you have gotten in, again, this is with a bullish bias, when this 1135 bar, so it's got high volume, it's bullish, it doesn't get taken out until here, 1210.
Yeah, exactly. And so I was going to mention that. I did take that trade bullish down there.
Okay.
But I didn't get in there because of all those green candles.
Okay, you waited for the reds to come in.
Correct.
And the next green to form.
Yep. So what happened is when all those green candles were coming in, I just simply did a limit buy on a pullback and with a stop down, with a stop loss down here. So once all those candles came in, this is the fun thing is a good thing to understand is once you get a bunch of candles in a row, and you can see the volume was increasing.
Yeah.
Volume was really, really nice right there. What ended up happening is when that retest occurred, you never know, is the trend going to continue lower or will it not? Right? That's the thing that you just don't know. However, based on volume and the fact that you had, 4 or 5 bullish candles in a row for the first time all day.
Yeah.
My thought process is, well, I'm going to try it. And not only that, but Square, also a multi-billion-dollar company, was also down 11% right here.
Yeah.
So my thought process was, okay, it's a new low. It's down 11%. I'm going to try it long. And worst case scenario, I lose an R.
Yeah.
But once it broke above this bearish candle, you're absolutely correct. Once it broke above there, I said, great. Let me simply put in a limit buy halfway into this range, of this bullish range, and I'm going to put my stop loss a little bit below the low of the day. It was a $1 risk. So I believe my entry on that one was like 66 and some change. My stop was 65 and some change. So it was a $1 risk.
Yep.
Got filled. Once this candle came in, this guy, I said, okay, this trade should work. So I moved up my stop to right below the low of the day so that if it did roll over, my mental stop was now below that candle.
Okay. So now
my hard stop below the low of the day so that I would lose about 0.7 because that's my average, as I've told you before.
Yeah.
And then when it bounced and when it made a new high, I exited a quarter of my position, took my stop, put it there, and then held for way too long and then got out somewhere around here for a little bit of a gain. And it was an okay win. Wasn't anything mind-boggling. I think I made like 0.6 R's on it. But, again, I mean, when you're fading, I played this multiple directions. I played it bearish and I played it bullish, so you got to feel pretty good about that. So if you go to the daily chart, this was the gap was just a really, really good gap. And I do like the fact that you played it bullish. And, yes, I do agree with you that it's just one of those situations where, look at that gap. I mean, look how it's opening below all of that support. And there's no support to the left at all. And the gap like that, that's another situation. When you get a gap like that, it is a retest gap on a level. Once that gap occurs, like you're looking at shorting when it retests for a swing trade. And that could have been a short somewhere on that bullish candle. You're getting in short and, there's your move. And then again, retest again. You're shorting up here somewhere and there's your move again. But it seems to me that Square is going to go a little bit lower, most likely. But in the same advent of that, I do like the trade that you placed. I really like the bullish move. And it's just going to take practice with the whole fade thing. Like, when do I get in there? When do I get out early? And when do I hold for a really, really, really massive win?
Yeah.
The answer is you'll know when to hold for a massive win. I tell people that all the time. They're like, no, I'm not going to know. I'm like, trust me, you'll know. Like, you'll be in the trade, and you'll be fading it, and you'll get this candle.
Yeah.
Like, that's when you stay in. Right. So other than that, you're going to be exiting early most of the time.
That makes sense. Yeah. I would say the big 2 cycle out is setting limit buys to where I'm buying into a red candle a big red candle drops right into where my limit buy, and just having the cojones to do that. That took a lot of mental work to try to be okay.
I'm glad you did, because the thing is, that is one of the hardest parts of trading, but it's the most important, because the whole adage, buy low, sell high. The other adage is buy into weakness, sell into strength.
Yeah.
So when you get a weak position, especially in a day trade, and you're getting a green bar, green bar, green bar, green bar, and then it's just like, wow, one of those things happen.
Yeah.
A lot of people will panic. We just simply, like you mentioned, we have to train our brain to go, hooray, this is a discount.
I can finally buy.
Exactly. I can finally buy. I can buy cheaper. And you have to relate it to something tangible. It's easier in your brain. So what I do is, when I'm looking at a stock trade, I actually often envision a car.
Okay.
Like a car or a boat or a house or whatever you like. I mean, it depends on how much money you're putting up, right? But if I'm putting up like 30 grand on a trade, I'm thinking to myself, okay, this is, a nice, 2014, 2015 BMW 750 Li. Am I going to, do I want to pay $30,000 for this, or would I rather pay $28,000? I go, yeah, I'd rather pay $28,000. Yeah. So the thing is like, that's going to help me saying, do I want to buy it here, or do I want to buy it here? I was like, yeah, I want to buy that on it's $2,000 cheaper than where it is right now. So I'm going to set my limit a little bit lower. And it's just one of those things. If you do make it a tangible, physical item that you interact with often, it helps.
Yeah, that makes a lot of sense.
So,
gives you a practical way of thinking about it.
Yeah, it has to be, man, because with stocks, it's all right, it's in the moment. But everyone, and everything else other than the stock market, wants a cheaper price. For the vast majority of their life, they want to buy it less expensive. Even like the housing market, very few people are going to be like, oh man, the housing went up in value, let me buy it. And that's when the bubble phase can happen, and we can see that in like Bitcoin and and everything. But to some extent, it's most people, you want to buy it cheaper than where it is now, even if it's just a few pennies cheaper. So I'm glad that you had that breakthrough, man, because that's a really, really important breakthrough to have.
So that one, and then just especially on the gap trading, just the not being over eager, It's just that those two I've been getting consistent results, which is all you're asking for. So
that's all you're asking for. And go back to your worksheet for me, because I just want to give you a little bit of praise. I love these numbers. Like, this is fantastic. The R's, like, that's just what I love seeing. Because, dude, you do this, it doesn't matter how much money you're trading. Literally millions, tens of thousands, it doesn't matter. These numbers are going to work the same way.
Yeah.
And I love this guy. I love that too. That too is super helpful. And then, you have an R loss. You have an R loss, but you had this 1.62 R win. Fantastic. Loss, very small loss. Love that one. Good R, good R. Like, you could just keep doing this for the rest of your life and you're good to go.
That's the plan.
And we're going to go and look at and figure out if we could shave off, because I'm 99% positive I can shave off a smaller loss on this one and a smaller one.
I'm 100% right too.
We've already looked at Square, so I know we could have shaved off some on that one, because it's all about how you lose, man. If you play really good defense, you will win the championship. Yeah. And with Square, we just talked about how you could have exited a partial, or you could have taken your stop up when that tweezer top came in. Even if your brain said, hey, I should sell half of your position. You don't have to sell it all.
You can see my notes right here, especially on the SBGL. So many mistakes, didn't take profits.
Yeah, let's go look at it. It's going to be fun. I think we go back to April 10th. SBGO. I know I can on a 5-minute chart. Good old April 10th. Oh yeah. Oh my goodness.
You want to switch the screen, Sarah? You want me to bring it up on mine?
You bring it up on your end. Yeah.
All right.
Oh, you're gonna have to type in the ticker again. It didn't load.
SBGL. Oh, there's my notes right there. I like when I go back and see my notes sitting there. So yeah, that's the. Yep.
Beautiful gap.
Where did it open at? Open at 420. So yeah.
Yeah. So go into 5-minute chart on April 10th.
There we go. That's the starter rate. That's the 9th. Yeah, that's the 10th right there.
Is that when you played it?
I played it. I probably tried to. This is a few months ago, so yeah, I tried to play it when it did this move here and started consolidating there.
Okay.
I probably bought it in one of these candles here.
Sure.
And then it went up a little bit, and then I probably rode it all the way down to somewhere down here.
Yeah, for sure. Which is fine. And again, the cool part is, I mean, there's the retest, just so classic, perfect in every way, literally textbook. And if I was in bullish, which I did not play this trade bullish or bearish, but let's say this candle comes in right there, that little lower shadow.
Yep.
Yeah, zoom in just a little bit for me on that one. But once that candle comes in, I mean, at that point, if we do a quick wave count, 1, 2, 3, some kind of 3, 4, 5.
Yeah.
It's like, all right, we have 5 waves that are over.
Now you're looking for reasons to get out.
Now you're looking for reasons to get out. Bingo. And I mean, this is a new high right here relative to just this resistance over here. The thing is, when you're doing a retest, if you're ever, here's a little trick for you. If you're ever doing a retest and you're playing the bull retest of the bear rollover,
yeah.
If you get back up to the previous low of the first 5-minute candle, that's the place. That's a great place to start taking profit or exiting the trade totally, because that's where I'm getting back in bearish. So if I'm playing this trade, I'm getting in bearish here with a stop loss there initially.
Yep.
And riding it down. And again, I might ride it up again. That's fine. But once this occurs, I'm getting back in bearish once that stock retests that primary level that I got in bearish earlier.
That makes sense. Yeah.
So once this lower shadow comes in, and then you get, an inside bullish candle, another bearish candle, and then another bullish candle. It's like there's definitely a battle going on. No reason not to stop right there.
So I guess I was looking at this. So this guy here at the 10-15 mark. He's your big one, reasonable volume. When he got broke, so I guess the entry wasn't too bad.
No, entry wasn't bad, but there's one change though. So you're right. This candle is the most bearish candle, but remember, it's after it makes the new low. Yeah. So this is the new low right here.
Ah, yeah. So you're not playing you're playing that. So that guy happens, and then you're waiting for him to find out the bottom.
Yeah, exactly. Okay. And so once we break these highs right here, because this is once we take out, that's the most bearish candle of the new low.
So you might have even been able to catch the bottom wick of this guy.
Correct.
You could have set a somewhere in there is a reasonable based on those highs, just sitting there with your limit order.
Either that, or once this candle comes in, that big bullish candle, I personally would have set a limit buy here.
Really?
Yep. So once that big bullish candle comes in, because again, look at the volume.
Okay.
Volume is massive. It's the most bullish volume that we've had
Yeah.
almost all day.
Okay.
And then it closes above this tweezer top candle pattern.
Yep.
So you get a close above there. Obviously, anyone who's shorted down here is trapped. This candle right here is almost a one white soldier candle right there.
Oh, yeah.
Yeah, so you got some bulls, and that candle also, this one also has a massive upper shadow.
Yeah.
So you have a big upper shadow. This candle closes above the upper shadow. It closes above this pivot. Volume comes in. I can put my stop down here. I personally, again, did not take this trade, didn't see it. But if I would have done a limit buy here at the top of the highs, stop loss down here once this candle closes. And I would have gotten filled on one of these pullbacks. And then once these candles come in, I move my stop up a penny or two, maybe three, whatever, and I'll be fully out over here.
Yeah, that may.
But even your entry, like I said, we're never going to get the exact bottom. Your entry is actually quite good. I liked it. Like I said, I think you easily could have simply lost less than a full R on that trade.
Oh, yeah. I probably should have made money on the trade, to be perfectly honest.
Oh, for sure. I mean, again, you could have used an exit just like a small profit. You could have taken a partial.
Because I think I was getting over eager and I was trying to play for these lines, and I need to be playing for the bottom of these bars, not the top of these bars.
Right. At least, if anything, if you're playing the top of the bars, you're going to have to get so let's say you want to do a 1, 2, 3, 4, 5 wave count.
Yeah.
And if you can get a pretty good wave count, you're like, yeah, I think this is the end of the wave 5. You're probably going to be taking off profit. But let's say that you never did. Let's say it was like boom, boom, green bar, green bar, green bar, green. Like it was no pullback at all. No pullback at all. No pullback at all. It's like, okay, I'll hold to the next pullback. As sucky as that's going to be, if you just have a bunch of green bars,
yeah,
okay, I'll hold through this guy. And then hopefully it does that.
Yeah.
But if you can clearly count a 1, 2, 3, 4, 5, and you're profitable and you're up more than an R or right at it on a fade, it's like, yep, worst case scenario, you should have broke even on this trade.
Yes.
Yeah.
Just my notes to myself, so many mistakes.
Yeah, which again, this is months ago, and you've been practicing since then. But same instance applies. I know it's always easier said than done, but everything is.
No, that's I've been was quoting your it's simple but hard.
Yep. Exactly, my man. You're exactly correct. But realistically, I do like that entry. I actually like everything about the trade other than after it was in.
Yeah.
I'm not going to make fun of the entry. The entry was solid because, again, you did wait for it to break that high. You waited for it to make a new high. At that point in time, you were pretty much in the wave, some kind of wave 3.
Yeah.
1, 2, and it was a little bit of a pullback of the 3 wave. So I actually liked the entry, and I liked the stop. It was just the after effect wasn't that great.
Yeah. I think I was noticing that on a lot of them, even the ones I was mapping out, when I was just playing along, the home game, was that was where I kept losing. Was I was fine with my entries, but I wasn't getting out, and I think the over eagerness, I think, was the correct way of identifying what was happening there.
Bingo. Yeah, bingo.
Especially bear retests.
Yeah, exactly. Because we know the trend is most likely going to do.
Yeah, the trend is not.
If we can't short it, and we can only go long. We know we're on a ticking time bomb anyway.
I am looking forward to finally being when I can start. When I get to a point where I can do this and then trade short it on the back end. It seems like a lot of fun, actually.
Mm-hmm. Oh yeah. Beautiful, man. What's the other one? The other one?
The other thing I've been working on is I call them just the consolidation trades. Waiting for it to find a distribution pattern or something like that.
Okay.
2 of them. I want to take a quick look at is Oasis and the New York Times, and I haven't actually put one's a win and one's a loss. So
OAS,
and these just happened. So on OAS, I've been waiting for them to, I call it trolling, and I've been waiting for them to find a very obvious, consolidation pattern.
Right.
And then just trying to catch the very bottom of that that consolidation. So I actually played this. So this is the daily on him. Is it? Oh, no, it's the hourly. Let's switch over to the daily for the moment. So he'd kind of been consolidating kind of in this range for a while. And so this was that December
low. Yep.
Yeah, when everything was going down. So I was trying to catch this bottom here. So I actually traded this one twice. One time I got over it. So the first time is I caught it on this red candle, and then
got stopped out.
Was trying to trade all the way up to here.
Oh, okay.
We got over eager, and then ended up. I caught on this candle with my stop down below this here. So yeah. I caught. I had a limit order right at the bottom of this. So it was whatever. It was 503 or some. Yeah, it was 503. Caught it coming down, and then rode it, and then rode it all the way back down, and just made a tiny profit on it.
Right.
Because I was targeting up over here, and then just the other day, having adjusted the whole overeager, I did the same thing. I was trying to catch. So on this one, and I had a limit order sitting for a couple days at 585 after that candle came in. Caught it on the same day, came up, and I think I sold it here. So
yeah, I like that. I mean, it's a great trade. I
mean, one, I don't know if it was it's just basically I'm looking for something that's consolidating within several months on a daily, and just trolling the very bottom and trying to catch the bottoms. So
only way you can so you had to do it with the limit order, right?
Oh yeah. And I'll set up so that candle come in, and I'll just sit there for a couple of days with the limit order sitting at a buy price I really like.
Sure. So let me ask you this question: who else do you think does this strategy?
I don't know. Hopefully people don't. You?
Big money. Yep.
Really?
Because what's referred to is pockets of liquidity. Liquidity, Liquidity, I think. And what that means is, let's say that you find a spot where you know everyone's stops are going to be.
Yeah. Well, so I have to say, because this is our last session, you had said buy other people's stops.
Same thing. Same exact thing.
Well, that one, and then I had been trying to figure out how the F to do that.
Well, you did it.
Yeah. Well, this is another realization about a month ago that I literally had to call my dad and was like, oh my God, I figured out how to buy people's stops. So
you go back on that boat.
Yeah, apparently. But no, it was right before he got on there, and I was like freaking out. And I was like, because this is one of those things, again, it's very simple, but my brain was not able to just.
Hey, you figured it out. You figured it out.
The buying into the red candle was the breakthrough there. But
that was it, man. And we all have miniature breakthroughs over time, and that was one that you had. And this particular trade, I can tell you right now, will work and it will not work. There'll be times where it does and times where it doesn't, and there's nothing we can do about it.
And pockets of liquidity is the stock. I imagine is looking for the cash.
Yep, exactly. Because if you have a bunch of sell orders that and you have people who need to buy it, well, who are they going to sell it to? The people who are buying it. Yeah. So if you need a bunch of buy order fills, then you go to the people who are going to be selling it. It's that simple. So if you're like, wow, there's a lot of people selling down there, it's like, all right, well, I need to buy a shit ton of this.
Yeah.
Let me go fill their orders because they want to sell to my buying. Let's go do that. Yeah. So if you have a giant order of sellers, that's where you want to get in. So I love that trade. I mean, there's nothing really I can say about it because you bought other people's stops, and that's exactly where they're going to be at, and it will work, and sometimes it won't. But in this situation right here, the trade that you took earlier, very similar situation is when it popped right below this really obvious support.
Yeah,
that's you getting in. Should have been you getting out right there with that new high.
Yep.
I would suggest if you're having struggles with it, Aaron, just practice taking partials.
Okay.
Because if you're not doing any commissions, it doesn't matter anyway.
Yeah, exactly.
but take off a quarter or a half or 75% or a tenth or 1/32 or whatever.
The sad part, it's worse than that. I got in over here on the 8th and rode it all the way up to here and rode it all the way back down.
What a lummox.
Yeah.
What are you doing?
Yeah.
Well,
yeah.
What I'll tell you too is this. One of the things that have helped me in a situation like that is having something that you need to buy. Having an exact price point of something that you're going to do and something that you're going to buy and something that you're going to spend money on, so that when that money is sitting there, because again, a lot of people think that the stock market is about growing your account as big as humanly possible. Like, yes, that is a goal. However, it depends on where we're starting and depends on how big we're going to be growing it. Because what you need to do is, a lot of people think that your equity curve is just going to look like this. It's like, well, not only is it not going to do that, it's going to look like the stock market.
Yeah.
Okay. Like your equity curve is going to look exactly like the stock market. But secondly, during this whole time, if your brain does not get rewarded, it's not going to do this.
It's going to invert back.
Exactly. It's going to revert back because there's no enjoyment. Like, why are you trading? It doesn't matter how much money it is. It truly doesn't matter. Yeah. If your brain gets no enjoyment because your brain does not know how to compute creative fictional digits on a screen. Meaning just because you make money, there's nothing that the money's not real until you do something with it.
Yeah.
And the ironic part is a lot of people have the attachment of losing money, but they don't have the attachment of making money. And so it's one of those beautiful mind tricks that you have to kind of create for yourself. And the easiest way to do that is to make the money real. So when you're going out and you're taking a trade, let's say it's $100 for a month. It doesn't really matter. Yeah. Like, okay, well, I'm going to go buy a new knife set or a microwave or a down payment for my refrigerator or a gold bar or a silver coin or whatever. It's like, buy something to make that money, whatever makes you happy. I mean, you could take that money and just donate it. Like, that's fine. Yeah. Whatever makes you truly happy, whatever puts pleasure into your brain, do that, because you'll repeat the process over and over and over and over, and you'll actually have something to show for it. For example, a lot of people will trade. Let's just say they're trading with $20,000, and people will go up to 26 all the time. I see this happen very frequently. It's like, bro, that is a 30% gain.
Massive.
Yeah. What are you doing? And then they're like, well, I want 30. It's like, well, so do I. And then the thing is, their account will go back down to 20. And then they'll trade it back up and they'll go to 25 or something. It's like, well, I'm not going to take money out because now I'm less than I was and I'm still not at my 30 goal. And then it'll go down to 19 this time. And then they'll really buckle up. They'll call me. They'll spend some money. Okay, so now their account's at 18 because they just spent $1,000.
Yeah.
With me. So now their account will go from 18 to 29 again. Huge move. But they're like, oh, I'm not at 30. And then, go back to, and so it's like, okay, what if you took the account from 20 and took it to 26 and then took out 4,000?
Yeah.
And now the account's manually at 22, and then you go from 22 back to 20. It's like, okay, so you go all the way back to where you were, but you locked in $4,000 of profit.
Yeah.
Your brain knows that. And now you have a new cool smart fridge. And you repeat the process again. 20 back up to, again, we said 25. You take out another 4. And you manually take your account back down to 21.
Yeah.
Take that 4,000 and you and your wife, go to the Dominican Republic and hang out with me for a week and trade all week. It's like, this is stuff that's legitimately possible, but if you don't link that pleasure, it's never going to happen, and you're definitely not going to. But when you do take that money out of your account and you have that automatic drawdown, that manual drawdown, your brain kicks back into, oh, I'm no longer playing with house money. Because that's the challenge a lot of people will have, is like, oh, I'm up, it's house money, I can do reckless things now.
Yep.
And that's, if we repeat this process, I tell traders all the time, man, and I'll tell you, like, let's say you do this for the next 4 years, and your account starts at 20 and ends at 20 for 4 years. However, you were able over that 4 years to pull out $6,000 every single year.
It's great.
Great. It's like, so you literally generated 24 grand in profits over 4 years. You were able to pull out $24,000. Hopefully you did something cool with that over that 4 year period. Like maybe you built a website, or you paid someone to to come and refinish your house or your kitchen or whatever. Like you took that money and invested that money into something else that made you more money.
Yeah.
And I know that you and your wife, you guys do online e-commerce. And so that's an amazing, I mean, gosh, dude, you could put $1,000 into Facebook marketing or Instagram marketing or whatever, or you hire, a business coach, you hire me, you hire someone else, you come in there and they revitalize your business. And then with that $3,000 investment, you make $25,000. It's like, come on, this is the most no-brainer thing of all time.
Yeah.
So saying all that to say, it's really important to every single month or quarter or, some type of time frame, have something that you're going to be spending it on and already know what it's going to be in advance. And it becomes a lot easier to take profit.
You're teaching your reptilian brain to do what it needs to do.
Correct. Because I mean, a lot of people are going to say, no, man, you have to grow your account. It's like very, very few people will do it successfully if you do not reward yourself.
That makes a lot of sense.
Yeah. Yeah.
Because when it was up here, I was on the moon, man. I was like, oh, I got all this money. It's house money.
Anytime I ever use the word house money, I sell everything and then just pull it out. That's one of my rules. True.
That is a really good rule. I might take that rule.
Yeah, like if I verbally ever say that out loud, I have another buddy who just created a new rule because he was up $7,000 on May 5th for the month. For the month of May, he was already up $7,000, and then we ended up walking away at the end of the month with like $400 of profit.
Oof.
And I was like, and I remember him saying, he's like, I have broken through my plateau. I've XYZ. I finally mastered trading. He said, and I said, dude, anytime you ever say that phrase again to me or out loud, just sell everything. Stop trading for the month. Because the results, if you think about it, is kind of asinine to be up $7,000 and then trade for an entire 3 more weeks and then lose money.
Well, it's I'm in Vegas, so you see it all the time. It's the blackjack strategy. You meet people like, oh God, I'm up $1,000 at the table. I'm like, yeah, you shouldn't play again. You should be done.
Correct.
You're just going to come pay it back and pay my taxes. That's all that's going to happen.
Bingo. So for me, anytime I play blackjack, it's very simple. I will come there knowing I'm going to lose $100. And if at any point in time I go up at all, I just walk away.
It's the only way to make money.
It doesn't matter if it's $5, $20, $25. Like it literally does not matter. If I hit a winning hand, I'm like, oh wow, I'm up. Then I just walk away at that point. And I go spend that. Like I had some fun. I got paid $5 to have a free drink and have a little bit of a good time. Get my emotions pumping. Do something I don't do that often, and I'll go do whatever.
Yeah, I don't play it, but I get to hear the stories of people, which is always fun.
Yeah, I mean, plus I just suck at blackjack. Poker, I can hang my own poker, but blackjack, I'm just gonna get out. I'm gonna lose.
Well, that's the dirty little secret. Is I know a lot of folks here who make a lot of side cash just playing by the book, playing poker, and just taking money off of tourists. Not even playing like really hardcore. They just come and they just do exactly what the book says. They play the odds, and over a long haul, they're gonna make money, and the average Joe's not. So
that's correct. Yep.
We look at one more.
Bring it.
Let's look at New York Times. So this one, I'm just making sure that. So this guy, let me just see. Let's leave him on the day. I usually on these swing trades, I'm either looking at the daily or the hourly. Is that?
Yep.
Okay.
So there's one main difference. I actually don't mind this trade at all.
Mm-hmm.
I already like it, but tell me what the main difference between New York Times is and Oasis.
What they're selling?
Nope. I mean, that is a difference, but
yeah, I don't know what you're getting at.
All right, so go to the daily chart and zoom out for me back to beginning of the year.
You're talking it's at an overall high.
Correct.
Yeah.
There you go. So right here, that was the greatest buy the stop price I've ever seen, like on any chart in my whole life.
Yeah, once.
I mean, the low in September was 21.34. The low in December was 21.27. Talk about getting boned. Oh my God! You know how many people had their stops right there and then just got hosed, just wrecked, and then it just went bananas.
Yeah, it literally didn't have a red day in January.
So the place where it will work better, and I'm not saying it can't work in a situation like this, but what I can tell you, and this is a secret that a lot of people will pay a lot of money for, is the third time around, it's always a little bit lower. So if I'm gonna get in on a third bounce, I'm gonna put my entry as low, like pretty solidly low. Now that doesn't mean that you can't get stopped out like you did on New York Times, but I will, like every time I'm playing it on the third bounce, like 1, 2, 3, on that third situation, I'm always going lower than the second.
I was, yeah. I've been thinking about something weird was happening on the third bounce. I've been saying that, and that's, yeah.
Now, the cool part is if you go to the daily chart now where we're at, I do like your setup again. I love the fact you just had the balls and go, yep, I'm just going to get in here. And that's what we have to do. I would have set my entry, and again, I probably should have gotten stopped out, but I would have set my entry here, and I might still be in by a penny or two, but I'd probably set my stop a little bit lower. However, this is a spot where if it does bounce, you can get back in.
Yeah, that's
if you stopped out, just go ahead and plan on getting back in. And if it does not bounce, it's going to just absolutely free fall.
Okay.
That's the cool part about pockets liquidity is they can also work the other way around. It's just better if it's occurring instead of at a high in a trend, it's occurring at a low in a trend.
Okay.
Does that make sense?
Yeah, it does.
Okay.
I think I remember asking you a question on one of your YouTube videos about trading 52-week highs, and your answer was, I like trading 52-week lows.
Yeah, kind of a dick answer, but the correct answer is because it just, when it's at a high, it's like, well, I'm going to be selling there.
Yeah, that makes sense.
That's where I'm locking in my money.
So on this one, obviously I'm bull bias right now. If we're doing that, we look for it to come up and come back down to this line or somewhere in here.
Most likely. Yep, most likely. And I would say watch this for a day trade because you're trapped. So let's say on Monday it opens up here.
I got stopped out on this one logistically.
Sure.
But other people, yes.
Yeah, but exactly. So if it gaps up on Monday or something, that's going to be a beautiful gap.
Okay.
Because the greatest part, and I tell people this all the time, is like if I ever take a trade and I get trapped on it, that's so good because you have to be excited about that because if you get into a trade and get trapped, other people did that as well. So look for an opportunity that if you just get wicked out, and that's how you know it's a trap is if it happens with a wick, like just one big massive candle, and then you get a wick and then you're out. It's like, all right, I'm going to look for, if it goes down lower or whatever, awesome. But if it does, if I know I got trapped and it gaps up and starts running, then I'm going to either day trade it or swing trade or I'm going to do something long to the upside to get kind of prepared for that.
Yeah. That makes sense.
Beautiful. It's a good one though, man. It's very good.
Yeah. Well, I'm trying to right now, just those are the only thing I pared it down and that's it. I'm just trying to do those types of trades, not look at anything else.
Do that until it hurts, man. That's really it. I mean, it'll get pretty boring pretty quick, but that's the point. When you're bored, you're probably profitable.
That's what I've been saying is I've been trying to get bored. It's been way too exciting for the last couple of months, so I've been losing a lot. So
well, exactly. But in the same instance, you are still new to the game, and it is, it will be exciting. Trust me, like it's always exciting to make money. I get that, and hey, man, there's no one more addicted to this thing than I am. So I get it. I fully understand. We just have to take it slow and go, all right, well, this is what we got. This is how we trade it.
Well, I think the other mental side is I had to, because before we left on doing the boat stuff, I was every day, all day from, half hour to hour before market close until market close an hour later, just staring at charts.
Yep.
Great, except for that I found myself, I was doing just overanalyzing it. I was just like, I was hanging on every bar for every 5 minutes, and when a lot of it's noise and not actual information.
Agreed.
And so I was like, all right. And so when I had more limited access, it was forcing me to like think about, okay, what's actually important here? What's actually, how you can actually make money on it? And so I've been trying to, okay, because I'm below PD doing, okay, I'm day trading today. This is what I'm doing. These are the trades I'm making if they're there, and then I'm not worried about nothing else. And so that helped a lot, is not trying to do 6 trades at the same time or in that kind of nonsense. So,
yeah, those who care least win most, man.
So,
like it's like once you learn it, it's pretty much it. I mean, once you get the basis, I mean, like at the point that you're at now, the next time we ever have a follow-up session, I highly doubt I'm going to teach you something mind-blowingly new. Unless it's like a psychological thing where you're like, oh, I didn't think about it. Like it could be mental stuff. That's fine. Like I can help you mental stuff all day. But as far as like, oh yeah, this is a hammer candle, Aaron. You're not going to be like, whoa, I never thought of that. So at one point in time, it's kind of like reading. Like once you learn how to read, you're going to know how to read forever. You can learn new words here and there, and you might learn new pronunciations of new words. But you can read different books. You can look at different charts, but at some level, you're going to know how to read for the rest of your life.
Yeah,
and that's it.
I showed my dad what a scissor candles were, or a tweezer bottoms and tweezer tops, and he was like, "What?" Like literally was like, "What? This is awesome,
dude!" They're so cool.
He was so excited. It was real funny. It was like I got to see what my dad probably looked like as a kid because he was so excited.
Yeah, they are so cool, and I mean, I love them. Like looking at this, I just see so much. Like I love this gap down right here. It's a beautiful gap. I love the closure of this candle below that wick. I love this gap down. I would have shorted the hell out of that. This gap over here is absolutely fantastic. Like just an absolute blisteringly bullish gap. And this is a beautiful pullback in here. Nice little, nice new white soldier right there. Second retest over here, another one white soldier candle. Beautiful things, man. And it's really great to see because that this pattern that you're looking at right now in front of you will repeat itself in the future with some other stock. And it's always cool.
I appreciate it, man. I cannot thank you for it. It's been so helpful.
Man, my pleasure. You've put in the work, though. That's the thing, right? You definitely have. You've put in the work, so it's not all me. It's you've done this, and I'm happy to know that you've. I mean, it seems like the day trading through April, and it seems like these tradings you've been profitable.
Yeah, I'm hoping now. Like I said, now that I'm consistent internet and all that other stuff, and I have a very specific set of rules, set of plans, I'm just going to sit and grind those out, and hopefully, just gonna we'll call this the verification phase to make sure that all right, I can mentally hold myself to these rules, and I can just do these 2 trades, and I can just do them correctly, and if I prove that to myself, then I'll start putting more money into the account and start trying to, do exactly what you were talking about. Take 20,000, turn it into 25, and go on vacation.
Yeah, pretty much, man. That's kind of it. It's like that is relatively the plan overall. And I will just shamelessly mention that there is a trading retreat in Nashville if you want to come down, September 1st through the 5th.
Well, maybe I'll try to make enough money to make that happen.
Yeah, exactly. That'll be the goal. If you can make enough money to do that, and then we're going to do another one. But we normally have 2 or 3 big ones a year. Yeah. So that one's going to be huge. And then the next really massive one's going to be in Dominican Republic, May 2020.
Okay.
So at least put one of those 2 on the calendars. And like I said, that I always tell people, trade to make it. Have that in your face. Like, okay, here's how much it costs. Let me try to make that amount of money. And it's just such a good feeling to trade, make the money, and then pay for something with trading. It's just there's no better feeling.
Yes.
Love it, man. Congrats, dude. I'm really proud of you.
Thank you, Jeremy. We appreciate it.
My pleasure, buddy. Have a great day.
You too, brother.
All right, see ya.